My family moved to Canada from Nigeria, not understanding how the financial system worked set us back a number of years. One day we walked into a bank branch and an advisor hit us up and said, "Hey guys, you should open up a TFSA with me and buy a GIC inside." And we did. It sounded smart at first, but when we needed the money, we couldn't get it. Fast forward, and I started a career in corporate finance. I spent 7 years working in the banking industry just to realize something very painful. Too many Canadians get taken advantage of by an industry that profits off confusion. So, I'm here to change that. Today I'm breaking down exactly what a GIC is, how it works, and when it makes sense to use it. So let's break it down. A GIC stands for Guaranteed Investment Certificate. The key word here is guaranteed. And how it works simply is you give your money to the bank, credit union, whoever. They lock it in for a certain period, so it could be 1 year, 2 years, 5 years, whatever the case may be, and they guarantee you your principal, so the amount you put in, plus some interest on top of that. In simple terms, let's say my homie and I, what up dude, come into an agreement. He says, "Hey fam, if you give me $5,000 today, what I can do for you is guarantee you a 5% interest over the next 5 years. Plus, once the 5 years are done, I will give you your $5,000 back." The downside is you cannot ask for that money within that 5-year period. Is that cool? Let's sign this contract. In simple terms, that is exactly how a GIC works. I put my money into the bank. They say, this is the amount of interest that's going to be paid on an annual basis, whatever, and you cannot touch it for that amount of years. Got it? So why do people use GICs? Well, simply put, a GIC, think of it like a piggy bank. It is low risk, low reward. It's great if you need the money in a short-term time period, so let's say in less than a year, right? You don't want to take too many chances on that savings that you have. And if you just want to lock in interest rates, let's say interest rates are peaking, you're like, you know what, great opportunity for me to get into something, why not? Then a GIC is great. On the flip side though, GICs aren't great if you need consistent access to your money. Because of their locked-in status, it becomes harder or nearly impossible to ever take your money out until the term is done. 2, if you're looking to build long-term wealth, odds are, historically speaking, your rate of growth is going to be much lower than what the market is going to be giving you if you're in the stock market. And lastly, if inflation is moving higher than the interest rates are, GICs aren't a great option, and I'm going to explain what that means. Inflation impacts interest rates, which impacts what GICs are going to be offering. So for example, when COVID was happening, the Bank of Canada was dropping interest rates massively, and so interest rates were also very, very low on what the GICs were going to pay you. Why? Because nobody wanted to risk their money into the market, and for that, you're not being giving a lot more money in return. So you could be getting a 3-year GIC for 1.2%. That's not really going to do you much, right? But in an inflationary environment, interest rates are going to go up. The Bank of Canada is going to change the interest rates, and you're going to see a benefit to your GIC value at the same time. Generally speaking, the prime rate, which is what the Bank of Canada sets as the basis rate for interest, is going to impact what the GIC rates are. As they take it up, GIC rates are going to go up. As they take it down, GIC rates are going to go down. So you can usually compare that to, well, let's say for example, if you ever have like a Wealthsimple savings account or EQ Bank or whatever, and you notice that maybe some months your interest rate has dropped from 2.75 to 2.5. Why is that happening? Well, that's because the Bank of Canada has adjusted interest rates, and that also impacts what the GIC rates are going to be. And typically, the longer the term, the higher the rate. So if you do 1 year, let's say it will be 1.5%. If you do 5 years, they'll be like, okay, you're keeping it longer, we'll give you 2.5% instead. That will alternate depending from bank to bank as well. Some banks will give you a higher rate than others. So I always recommend shopping around. You usually find that the banks that aren't as big will offer much better rates than like the big 5 banks, for example. Now for the taxation of GICs, something we don't really hear about. Any interest that you do earn from a GIC is considered taxable income. So of course, if you have it in a tax-free savings account, a TFSA or an RRSP, the Registered Retirement Savings Plan, it is completely tax-free because any income that you earn in those accounts are tax-free. However, if you own this in a regular savings account or a non-registered investment account, any interest that is earned on that will be added to your taxable income for the year. So just keep that in mind when you're deciding where to place your GIC, because that becomes a very important piece to the investment planning. So to recap, GICs are great if one, you're nervous about the stock market, you don't want to take any chances. GICs are safe, they guarantee your principal and give you some interest on that. So if you don't mind just a little bit of growth in your funds, GICs, great option. If you need the funds in a near-term period for a big purchase that you don't want to risk life on, so let's say for example you're saving money for a down payment on a house, you have a big car that you got to buy, a wedding ring, whatever the case may be, you got to do it in a year and a half, then you're like, you know what, let me just keep my savings safe, secure, so I don't have to stress. I'll buy a 1-year GIC, get a little bit of money on that. Fantastic option. And also, if interest rates are high, you want to lock in a nice rate. So let's say today interest rates are peaking and you're like, you know what, I can get a nice rate for a 5-year GIC, so I'm getting that nice rate for the next 5 years. Then boom, GIC is a great option. So think about it similarly. If you're getting a mortgage and you're like, I want to lock in a nice fixed rate today because in 4 years rates are going to change. So let's do this 5-year rate right now and then we'll see what happens in the next 5 years. That's the same idea of how GIC rates and planning ahead for the future investments work as well. On the flip side though, you don't use a GIC if you're trying to build long-term wealth, okay? If you want something fast and rapid, the stock market's historically going to do better for you. I'm not saying you should do it. I'm just saying it's not going to be as good if you're doing a GIC versus the stock market for long-term growth. And if you want flexibility on being able to take out your money, GIC is not going to give you that. So if you're looking as, okay, I want some passive income, it's not the greatest option for your financial plan. All right, so in final summary, a GIC is essentially a contract that you come in with the bank, the financial institution. They guarantee you your principal, the amount that you put in to begin with. They will also guarantee you an interest rate, so be it 1, 2, 3%, whatever the number is, in that moment that you give them your principal, and it will be locked in for whatever amount of years that you agree on. So it can be 1 year, 2 years, 5 years. Honestly, sometimes you can even get 3 months. The longer the rate, so the longer the years, the higher the interest rate is going to be on that GIC. But most importantly, you cannot take the money out from that GIC until the agreed upon term is over. And I still don't know how to end videos, so this video is over now and you have yourself a great day. Subscribe, like, and share this with a friend so that us immigrants don't keep getting screwed over by the financial system.